Welcome back to my daily report market analysis videos with me, Richard, market analyst at Hantec on Friday the 31st of January. Looking at cable, where the sterling price actually strongly rallied yesterday, we saw this decent bull candle formation on cable, and that came in the back of the Bank of England decision not to cut interest rates, and sterling subsequently rallied sort of around about 80 pips or so, and that rally has continued into today's session. It's been a decent showing today, a little bit off the top, but ultimately we're still higher on the day. And actually, as the Europeans came in, they bought into sterling, pulling it through the initial rally high of 31.10 area from yesterday. Interesting that we've pulled back towards that, and it's looking to see the market finding a basis of support around there. So that 31 figure area, seemingly 31 to 31.10, is a basis of support, and I think unless you see the market falling below 130.80, which was the sort of consolidation support from yesterday afternoon and overnight, I don't really think that there's too much to worry about for the sterling bulls at the moment. But the caveat to that is that you do still have this triangle consolidation of these two marginal trend lines, the marginal positive trend line, which has caught all the lows through November, December, January, but also equally the marginal downtrend line, which effectively this morning you could argue has just been added to, with the rally resistance at 131.40. So is this just part of the consolidation? I think yes, it has to be seen as that way until we see a breakout above the two key levels, which is 131.70 on the resistance side. That is the mid-late January high, or below 129.50, which was the January low. So until you get a breakout of either of those two levels, you're pretty much still in consolidation mode, and that consolidation mode has taken a marginal positive bias through yesterday's move, but still is in place. 40, well, even 43 you could argue, to 57, so very much sort of consolidation territory on that daily RSI. MACD line's pretty much bang on neutral, slight uptick on stochastic, so obviously taking account of yesterday's bull candle, but broadly speaking we are still consolidating, and that will be the case until 131.70 or 129.50 is breached. Marginal positive bias taking through the hourly chart, and you could argue that is the case whilst RSI remains above 40 and MACD lines remain above neutral. But as I said, support to watch 30.80 initially, but it's interesting that initially we're also starting to find a basis of support in the last few minutes around the 31.10 area breakout. So with that in mind, I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.